Alright, welcome to this lesson on relative strength index. So this is the part 1 of the lesson. So basically, what is RSI? And to give credit where it's due, it is developed by J. Wells Wilder. Basically, it is a momentum indicator and momentum oscillator. Now, I'm not going to go into calculation because it's not that important to know. So basically, it takes the average of the up days and also the average of the down days to compute the RSI. And it measures the strength of the trend, the momentum of the trend. But with that said, if you see RSI slowing down a little bit, it doesn't mean that there's no more momentum. It just means that the acceleration has slowed down. Okay? And what it does is that it identifies potential reversal points and also divergence. And it can also help you identify the strength of the trend, okay? Depending on which point the RSI gives you the signal. So basically, RSI looks like this. I'm going to go into detail later on. And normally, you will find this indicator at the bottom of the chart, okay? Now, the settings for RSI, the default is 14. But if you use 14, the downside of that is that it's going to give you very, very little signals. But with that said, if you use 14, the good thing about RSI in itself is that it is less prone to big spikes, okay? It is not going to shift because there's a big spike in the price action. But if you look at things like stochastics and CCI, it's going to give you a big spike in the momentum indicator as well when there is a big spike in the price action. So you can say RSI is less distorted by any outliers in the price action. But regardless of what you use, if you use 14, it's going to give you less signals. But if you use 9, you will get a lot more signals. But does this mean that if you get more signals, then the better it is? With more signals also means more false signals. Now, there's no best number for this because just like any other indicator, you don't want to find the holy grail number, okay? Some people use 14, some people use 9, some people use 5, some people use 11, some people use 21, whichever suits their risk appetite and suits them. Personally, I just find that 9 is okay. It's not too many signals, but also not too little signals. So you can apply to close, and then style you can use any color you want, and then fix minimum, fix maximum. So once you press OK, on your chart you will see this. You see a low end, which is 0, and on top you see 100. Okay, so basically the top part from 70 to 100 is the overbought zone, and then the middle from 30 to 70 is the transition zone, or I would say the neutral zone, and at the bottom is the oversold zone. When price moves up too fast, it will go to overbought zone. When price moves down too fast, it's going to go on the oversold zone. So overbought is more than 70, oversold is less than 30. But some people, they would want more filter. They would tell themselves, okay, I'm just going to go in when RSI goes above 80 or below 20. So this is more of a conservative approach, because if they feel that RSI is giving them too many false signals, then they are going to add this filter. I'm just going to go in when overbought signal goes above 80, and also when oversold signal goes below 20. But by default, I feel that 70-30 is okay. How to trade RSI? Number 1, determine the trend that you're trading at. Are you trading the bullish trend or bearish trend? Then you gotta look for oversold and overbought signals or any divergence. Then of course wait for price action confirmation. Wait for the price to test a support, resistance area, critical area, and then you can go in from there. Okay. Now one thing you realize about RSI is that in a downtrend, you can see a downtrend over here. Right? RSI will tend to hover right at the bottom. Okay, it tends to hover below 50 most of the time. Whereas when price goes in an uptrend, it tends to hover on the top portion. Do you realize that? It tends to hover above 50. So you can more or less say that when RSI is hovering below or very near 50, and then it has more bearish implications than bullish. But if it is hovering above 50, or you can see most of the time it is at the top portion, then you can say that it has more bullish implications. And the thing about RSI, just like any other momentum indicator, is that in a downtrend, it's going to give you a lot of oversold signals. So what does this mean when you see oversold signals? At the start of the trend, at the middle of the trend, it just means that the bearish trend is going to get stronger. But if you see oversold signal at the end of the trend, then it means something different. It means that price is indeed oversold, overextended, and hence potentially you will see a reversal upwards, okay, in price. Similarly, for uptrend, you will see a lot of overbought signals. At the start of the trend, you see overbought, it just means that bullish strength is strong. In the middle of the trend, you see overbought signal, bullish strength is strong. But if you see it at the end of the trend, then you need to take note. It probably means that a reversal is coming up, okay? But with that said, doesn't mean that if it goes to overbought, oversold, then you need to buy, sell. It is just a warning signal, okay? It is not a signal for you to buy, sell immediately. It is more of a warning signal. In a bearish trend, you're looking for a sell trade. So you want to enter on a sell trade when RSI goes up to overbought. In a bullish trend, you want to enter when RSI goes to oversold, okay? So for example, you see a bullish trend over here. And in a bullish trend, of course, you see minor retracements downwards. Follow the step that I gave you just now. First step, determine the trend. Second step, wait for RSI to go to oversold or overbought levels. But most importantly, the price has to test a key critical level. So you can see price came down here and then test the 100 SMA, okay? And then it gave you a couple of indecision candles, then followed by a bullish signal. So you can see sort of like a bullish engulfing pattern here. But at the same time, RSI went from oversold back into neutral level, okay? And hence you can make a buy trade from there. And one thing you take note of when it comes to using RSI is that you cannot buy sell immediately when the price goes to overbought or oversold, because you can see, for example, over here RSI went to overbought, okay? If you sold over here, it was at an overbought level, but price continued to go up, right? Because overbought can continue to become more overbought. So the right way to do it is to wait for RSI to go from extreme levels back into transition zone or neutral zone. So in this case, you don't want to sell because you're trading against the trend, okay? I'm just explaining to you the fact that doesn't mean that if it goes oversold, then immediately you should buy, because RSI can go from oversold to more and more oversold, okay? So you need to wait for it to come back up to transition zone, then you enter. This is the safe way to approach RSI or any momentum indicator. Now the thing about RSI is that it can also help you spot false breakouts. But first thing first, look for an entry. So you can see there's a bearish trend over here, and price came up and test 100 SMA, and there's a confluence, and it also tests the trend line. And price found a bearish army pattern, I don't know if you can see over here, and at the same time RSI gave you an overbought signal. Now if you are to use 14, it probably wouldn't give you an overbought signal. That's why I used 9. So you can get a good profit after you sold at this level. But right after that, you can see price made a false breakout over here, okay, and then came back down. How do you spot a false breakout? One way is to use RSI. If it breaks above the trend line and gave you an overbought signal right here, okay, high chance it will retrace or even be a false breakout, because it is normal for price to break the trend line above and then it comes down, test trend line again, and then bounce off. Okay, it happens too. You cannot predict the market. But in this case, when the price came down, it went back below 100 SMA and 50 SMA. So you know that this is for sure a false breakout. So just understand that when it comes to momentum, it is strongest at the beginning of the trend. medium at the mid-trend, and then weakest at the end of the trend. That's why you see a trend reversal. So when you're in a bearish trend, like I said, when it goes to oversold, you don't want to buy because you are trading against the trend. Okay, just ignore oversold signals. Okay, so with that, I'll talk more about RSI in part 2. So with that, I'll talk to you in the next lesson. Bye.